Greetings, Algo artisans. Welcome to the weekly Algo Factory Forex, crypto, and stock forecast. We're going to talk about some charts. We're going to talk about economic data coming out. And we're going to take a look at what happens when the Fed cuts interest rates historically. And we're going to talk about it right now. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, so here we are looking at this week's economic data announcements. Monday the 30th, we have the German preliminary CPI. So the euro, affected by this Germany economic data, might be a little risky to trade, but just the same, we have Chair Powell speaking. Okay, that's going to happen 1:55 p.m. EST. It's going to happen towards the end of the day. There might be some action, maybe in the currency markets or the general markets at the early part of the day. But I might also be pretty cautious with that. Often I don't take a lot of large trades on Monday anyway because the market's adjusting for whatever happened over the weekend, and the market also might slow down quite a bit until Fed Chair Powell has to say what he has to say, and this is going to be at A View from the Federal Reserve Board. That's what the discussion is titled. It's going to be at the National Association for Business Economics annual meeting in Nashville. Now, what is pretty common is the market will really dissect whatever he says to try to get an indication of what might happen next with rates. And we are going to talk about rates coming up here pretty soon, but let's take a look at some news coming out the next day. If you're trading the European Open at about 5 a.m. EST, you're going to see CPI data coming out for the euro in general. This is CPI flash, so this is going to be a very important number. Okay, this is going to be the inflation number, which the whole market is watching. So if you are trading the euro, there's going to be some pretty decent volatility, most likely after the US Open or even before it. That might be fun to trade, and then of course markets might stretch out, overextend, and then be slow for the rest of the session. Possibly the Asian Open might not affect US stocks that much, might affect crypto a decent amount. Let's move on. 10 a.m. EST, we have the manufacturing data and the job openings come out, and as it is with any high impact event, we could see some pretty strong moves in all of the markets across the board. Stocks, Forex, metals might see a move. It just depends on how far the data is off from the estimates that you see on the screen. And by the way, you're looking at forexfactory.com. Great spot to grab this kind of data. Now, Wednesday, we have the non-farm employment change. This is employment data. It's a high impact event for the USD. It will affect markets across the board if the data is far enough away from the estimate, right? So the forecast here is 124,000 jobs added. If it's way below or way above that, of course, that might affect markets in general. Usually US markets and any FX pair related to the dollar. And if it's strong enough, it can affect the whole world and everything. But that would be pretty strong to make that happen. We have some data coming out for the Swissy overnight, their CPI. And the Swissy is kind of a quietly strong currency. People don't understand it's pretty integral to the world. So if they have a high inflation number, that's the European session. And that could affect the currencies, especially on European Open. Next, we have unemployment claims as we do every Thursday. And then the services PMI, Purchasing Managers Index. So these data coming out at 8:30 a.m. and 10 a.m. respectively, East Coast time, those could affect the market. And again, I would be probably waiting to trade on Thursday if I'm going to do the New York Open until after about 10 a.m. EST, because chances are whatever happens with the unemployment data, that could be either erased or muted depending on what's going on with services data. So I'd wait until after that to trade, especially any kind of Forex pairs or anything like that. Day trading, right? If I'm swing trading, I'm not quite as concerned with that stuff. If I'm going to enter a swing trade, I'm going to wait until after that data comes out, most likely. Now, when it comes to Friday, we have 8:30 a.m. EST. A fair amount of data is coming out for the US, so I'd be careful. That will be about an hour before the New York Open, so it might add some volatility to the New York Open for our stock traders out there, especially. And of course, any of these high impact events, if far enough away from the estimate, could cause havoc in really any market, but especially US related markets. So let's move on. We're going to talk about the interest rate. Anytime you see CPI type data coming out, especially for the US, you're looking at the possibility of some changes in the interest rate. And we just had big news last week where Powell went ahead and came out and did a jumbo interest rate cut. People thought we were going to see a 25 basis point cut, and it ended up being 50 basis point cut. And that's an indication that money is going to get cheaper. It generally pushes markets up over time, but a lot of people make the mistake of thinking that interest rate cuts are going to push markets up right away. Well, let's take a look at the history of that and possibly why that might not be true. We've gone over this a lot of times, but I think we should go over it once more briefly before we move into the charts. Okay, so here we are looking at the history of the Fed funds rate, and each of these shaded areas that you see is a recession recession. What do we notice about what happens when rates get cut? Pretty often, not every time, but pretty often you see a recession following. For example, back in October of 1957, we saw the interest rate get cut, and in succeeding months, we saw it the next year down to about 1%. And we saw a recession during that period of time. As the rates were falling, the recession was happening, and then once the rates bottomed out and started to ride up, we saw this recession ending by measure of this map. Let's go ahead and zoom in a little bit so we can see this a little bit easier. Now in 1960, we see the same thing happen again. March, April of 1960, rates were at 0.84%, interest rates got cut, and the markets moved down, as is denoted by this gray area. Markets went into recession until the rates bottomed and then started to head back up again. Now, sometimes you see a rate cut and that doesn't happen, but generally, very large rate cuts that go for an extended period of time tend to see a recession right after that starts. For example, this was the Penn Central Bank crisis. We have here in 1974, another bank crisis. We have Latin American debt bubble up here in 82, and this really just kind of continues on. We see the same thing happening over. Again, large rate cut. Economy goes into a recession for at least part of that time, and then we see recovery afterwards, right? All the way up to 2000, the dot-com boom. We saw everything fall pretty strongly, and then finally, once rates started to bottom out, we saw the recession over. Same again in December of 2007. We saw the great financial crisis. Rates got cut, and we saw a very long recession, all until the rates bottomed out. And then we saw the economy come back online, and it did take quite some time for the markets to come back up. And of course, COVID is COVID. We saw a very brief recession, and we saw trillions of dollars injected into the economy afterwards, and the market went up. So I just wanted to show the history here of how often it is that we see problems in the economy, rate cuts happen, and a recession happen after the rate cut, because everybody seems to think that rate cuts are going to push the market up, but you see recessions very, very clearly marked out here. And of course, we could compare this to market crashes and things, but I think that's enough to let people understand that just because we see the rates being cut, it does not mean we're not going to see some kind of recession. And in fact, the odds are pretty decent that we will see a recession, and the indication is going to be a little bit more clear if we continue to see rates being cut. If the rates get cut every month, and it happens several months in a row, by the time we see that it's happening several months in a row, chances are we're already starting to see the signs of recession. We're starting to see them a little bit right now, depending on who you talk to. So let's move on into the charts, and we'll first take a look at Bitcoin, because I know a lot of people who watch this are interested in what's happening with Bitcoin. People view Bitcoin as sort of an inflation indication, meaning as price of Bitcoin goes up, it means that, according to some theories, that inflation is rising as well, being reflected in the price of Bitcoin. And we are in the middle of a bull market, and I'm going to look at the weekly chart just so we can take a look at what's happened since the halving, which happened right about here in April, mid-April. We saw the Bitcoin halving happen, and price has been doing what it typically does right after a halving, and that's just a pullback for a period of months, usually through October, and then it starts to head back up again. What is unique about this particular time was that Bitcoin made all-time highs prior to the halving. That has not happened before. However, there have only been 4 halvings, so we don't really have a large data set to say what usually happens. We can only point to the past data that we have, and it's not very strong when it comes to data points. I want to see hundreds of data points, not 4 or 5. That being the case, if the normal behavior for halving year occurs, which also happens to be an election year, then October becomes Uptober, and we see a breakout above the all-time high, which was about 74,000. So what we're going to do now is we're going to zoom in and take a little bit closer of a look at what's been happening and what might happen, and we're going to take a look at this week. But to go into the daily chart, each one of these candlesticks is 1 day's worth of price action, and we can see here that we have some highs that we have to negotiate. We have this June high / early July high sitting at about 72,000. We have a more recent high about 70,000, and that was back towards the end of July. Now we did just break the August high, and this was in a downtrend, okay? And now it is sort of violated that downtrend. I don't know if I'm quite comfortable saying we're in an uptrend, but technically it seems that we are. I just want to see a higher low. Let's go ahead and map that out, what I'm talking about. We're going to map out the trend. We had very clear lower highs and lower lows going back to March. So this is a very well-defined, very clear downtrend. Lower highs, lower lows. And then we got this lower high, but then we have what became a higher low, and now price is above this prior high. So if price were to break downwards and create a higher low than this right here, then we'll be in an uptrend. Technically, we're already in one, because I'm happy enough to say we have a higher high after a higher low. However, I would like to see price really break above 70,000 before I get terribly bullish. So if I were to map out my bias, my sentiment based on price levels, I would say that between 52,500 or so and 65,000, I'm flat, right? That means I'm not bullish, I'm not bearish. I'm just watching price to try to get an idea what's going on. And algorithmically, it's about the same. Algorithmically, I do see pretty strong possibility of price moving up. And of course, we have price history that we just discussed. August, October generally being a strong month after September being a weak month. Now let's take a brief look here. We got above 65,000. I'm slightly bullish, especially given where we are in the calendar year. October, we just talked about that. Slightly bullish, even if it dipped back into the flat zone, but it made a higher low and continued back up into the slightly bullish zone and broke whatever high it makes here, I would be even more bullish than that. This would change from slightly bullish to just bullish. Maybe. Depends what the algos say at that time. Above here, I'm relatively bullish, and that's above 70,000. And that's going to also include anything up to the all-time high. And then, of course, above the all-time high, you'll have me as strictly bullish, given where we are in the calendar year, given everything else that we just talked about, and of course the algos, I'm sure at that point would agree with that. Now let's take a look at the algos for what might happen over this week. Looking pretty bullish. Price is up against resistance algorithmically. That means that price, if it were to move up, it's going to have a couple of different looks. If it were to be moving up, that resistance could make it tough for price to continue up in a strong manner, so we might see a lot of pullbacks, sideways action, and then maybe a breakup after that. If the market becomes bullish enough for whatever reason, it might be that more money flows in, it's just time to go, there's not enough bears. Of course, price could just jump up right away, and those are really your two main basic kind of bullish scenarios. And of course, price could do anything. It could jump back down here, it could go down. I mean, really, there's no way to know what price is going to do exactly, but those are the two scenarios I see happening most likely. There could always be just a quick pullback down into this consolidation right here. This little consolidation that happened before, it broke up above the 65,000. So price kind of meandered here, broke up above. Price always could dip back down, and full disclosure, I'm in a long at this time based on this trade, based on a consolidation breakout above resistance, and my stop loss is below this now support was a resistance and is in this area in general, and of course I'm taking profit prior to the next resistance up here, and that's all been done privately with Algo Factory, although I believe if you watched last week you might have seen me enter that trade during our live show on Friday. So that's more or less what I expect. Sideways action to up, most likely, barring some kind of a surprise in the market or anything like that. Now Fed Chair Powell, if he said something extremely crazy this week, then of course we could see anything happen, but I don't expect it. Not after a basis point cut. I don't think he's going to say anything insane for some kind of other meeting that is not meant for him to say things, right? He's just participating in some kind of a form, if you will. Let's move over and take a brief look at the equity indexes. Okay, here we are at the SP 500 futures, the E-mini. We can see the price is broken up above, and I can tell you in the algos, it's just bullish, bullish, bullish. There might be time for a bit of a pullback. Overall, it's bullish, but we might see a bit of a pullback to this prior high, depending on how things happen. Price doesn't go up forever. It always pulls back to grab liquidity at some point, usually, not always, but usually. And I think we have a decent chance of the ES1 coming down minimally to about 5,700, and it might even retest that all-time high. Now, once it gets there, if it gets there, I might be able to take a look at that, take a look at the algos and say, okay, this might do X, Y, or Z. But for the moment, on the daily chart, I do expect either a pullback to grab liquidity anywhere between 57.50 and 57.20, or perhaps sideways movement until the market becomes more clear. It makes a decision up or down. Unless we do see some money really enter the market or something like that, I don't necessarily expect an insane move up, but you know what? It's the SP 500, and if they want it to go up, they will force it up. And I can tell you, we are in an election year. I expected more sideways action than I'm seeing, and it's pretty much been up. I mean, we have, of course, have had a pullback. We had the Japanese yen situation, of course, and that pulled markets down pretty strong back in August. But since then, it's been, with the exception of one technical pullback to grab liquidity, it's been straight up. It's just been what it is. So I think we're looking at sideways to up. Any pullback would be temporary. That could change, but that's probably what it's going to be if you ask me, and I think you're here to ask. Same's going to be with most of the indexes, right? You're going to look at the Dow futures here. Same kind of scenario. Looks even more bullish to me by price action. So if I were to take a look at where price might pull back to, if it cared to do so, I'd say about 41,700 makes a lot of sense. It's already done a slight pullback here, so it may just continue up, but there is a pretty big gap that might need to be filled right in this area, right above that 41,800 area, 41,007. So price could pull back to grab that. Again, I think it would have to be a surprise to the market because the Dow really erupted and tried to head it north last week. So I do expect, again, sideways to up action. We've seen all-time highs recently. We may continue to see more of those as we go into the election. Sideways or up, down of surprise. And the same is going to be with the NASDAQ, the QQQ. Now, we haven't seen all-time highs with that since July. And tech sector has been taking some hits hits for sure. It hasn't performed as well over the past, say, several months. And I get the feeling that Nvidia and Apple have a fair amount to do with that. There's a lot of sell-off, a lot of profit taking. And of course, we had the Japanese yen scenario pull markets down, and they just haven't seemed to recover as strongly as they did. So that can be an indication of a lot of things. Everything is cyclical. NASDAQ being tech heavy, obviously tech is underperforming. However, we might see that change at any given time. When they start to pump money back into tech, it should continue to go up. For now, I do expect price to go a little sideways for a minute. We might see price pull back as shallowly as just a few more points down. Let me zoom in a little bit. If some old structure price could pull back into, but really it could go anywhere realistically between 448 and about 485. And it could happen within a week. It would have to be a very strong pullback. I don't see it very likely going past 469 though. So that's the most likely area. I see it pulling back to anywhere from really 469 to about 477. If it were to pull back and go deeper than this prior high, I think your most likely targets are going to be between 470 469 just purely by price action and structure. But let's go ahead and throw a fib on there and see where that 618 lies. If you're to treat this as a high time frame impulse, your 618 is going to be just below this 469, and I do see that as a decent probability, just that 469. Again, the 382 is sitting right at 476-ish, and I think price could just simply bounce off that 382 and continue up. But again, tech not looking as strong as the rest of the indexes. Algos are looking for at least a shallow pullback or sideways action right now. I wouldn't expect it to head up, but you know what? It could easily head up. It's the indexes. Money can just keep getting pumped into it. Algos, you name it. Never bet against the indexes while the economy is still anything but dismal. Let's run and take a brief look at our major pairs. Get out of it. So the euro is looking pretty interesting. It's in a pretty high time frame move up. It is bullish against resistance. I would not go long on this until price breaks above really $1.12 and even a little bit higher, because we have this sneaky bit of structure right here, right up at $1.12.147, right? Rather than just above $1.12.02. So for the moment though, this is on the daily chart. We could take a look and see what's going to happen a little lower time frame, but I do expect sideways to up action and have it continue to knock its head until it possibly breaks out of here, which would be really more of a high time frame indication that the dollar is getting weaker rather than the euro getting stronger and the dollar getting weaker against other currencies. If you look super high time frame, you will see that this has been in a very high time frame consolidation, and it's going to break one way or the other. Let's jump to the weekly and take a look at the high time frame look on this so we can have a general idea of what's happening. I can tell you that high time frame, the algos are very bullish against resistance, and of course price pulled down going from June of 2021. This is a very high time frame look, and if you're to treat this as one impulse down, it's now pulled back up to the 618. If it were to head down, it would head down. Now it bounced off the 618 1, 2, 3 times, and now it's consolidating right below that 618, and it's just staying right in that area, and it does not look like it wants to head down anytime soon. And to me, a consolidation below resistance after a very long strong down generally means price is eventually going to break above. But I don't like to jump into ceilings even if I'm wearing a helmet, so I'm going to wait for high time frame moves upward until it breaks above. And again, we have some more resistance to take a look at, but this is very high time frame, so let's take a look at what our opportunities might look like this week rather than next month. Again, we have this high time frame resistance scenario. We do have a very messy formation here that might make some sense. It's messy, but there has been pretty low volatility, as August generally is, so that's why this might be a bit messy. But as long as these lows continue to get higher along the bottom of this ascending triangle, we have a decent chance of seeing price break upward. However, it's a messy chart, and I probably would either be scalping or just avoiding this altogether. Not very clean, not very nice, and moving up against resistance. And we're going to see the opposite with other currencies that are US based. Now, the pound, on the other hand, we're seeing a similar look on the pound, except on the cable, that is. One issue though, if you look high time frame, we've already seen a high time frame breakout if memory serves. Yeah. So we had a different look here where the British pound has gotten stronger against the dollar or the dollar weaker against the pound, right? And we have some high time frame structure that we probably won't have to worry about for at least a couple weeks. So as it stands right now, this is a very bullish pair. So I would be not worried so much about any resistance right now, because resistance was right here and it broke out, and then your local resistance was right there. Price broke out, jumped off of that. Remember, this is the weekly. These are high time frame looks. Well, we don't really have a lot of resistance overhead on a higher time frame. To look at the daily, we have price heading up, and we have seen a bit of bounce off of this structure right here where price had pulled back in September. So price made a high, bounced off that, is consolidating right here. And a lot of markets seem to be waiting for something to happen, or perhaps they are just simply gathering steam before they move. And it does seem that there is going to be a breakout above this this high right here, which is at $1, I should say 134.35. 135 USD. So in this case, the algos are relatively bullish against resistance. I'd be careful longing on this because price and pullbacks could be brutal and unexpected. However, if one were to find the proper scalp, one might be able to pull some money out of this market. But you got to know what you're doing. For the moment, I would not be long on this. I might look for price to at least head down and grab some liquidity either down here at this, and I'm going to zoom in on this. And again, we're talking low time frame trades now. So again, avoiding the news events like I do. I wouldn't long on this until algos were very clear, or I could get a bounce right here off of 133.60 in the USD, or perhaps have it pull down and grab some cleaner liquidity right here around the $33.12. And of course it can really turn around at any time, but until price at least made it down here, I would not be long. And if I missed a trade, I missed a trade. I like clear trades. I don't like messing around. Let's take one look here at the USD JPY and call it a day. Now, of course, the USD JPY, we did a lot of coverage on this back in August, and I can tell you that high time frame, this is bearish. However, it's finding some support. I do think eventually those supports will be broken. So let's take a look on the daily, and what I expect to happen here is kind of a sideways move until the decision is made. Now, I can tell you right now, high time frame, this is bearish. We're not seeing this just yet, but we might see a bit of a range in this area created, and it might create some opportunities for us to trade the range. We're going to see about it. For the moment, algorithmically, this is a bit bearish, so we do see some moves up right now in the lower time frame. You can see how price is pulling up right here after a strong move down, and basically price bumped its head last week right on this resistance, a little below that, and started to head down. And I do think, just based on the algos, to see price either go sideways or down on these lower time frames. This is a swing trading time frame, so 3 hour. So price could easily pull back, grab liquidity perhaps up here, perhaps right here in this kill zone right there, and then start to head back down. And given that what I see is a little bit bearish on the algos, I probably would be either scalping up if I was going to scalp, or I would wait and sell the rallies. The trend right now, if you look high time frame, is bearish. This is a bearish trend. This is lower highs, lower lows, and it's very bearish going back to July. And I see no reason for this to change until it does, right? So for the moment, unless I see a break above here with a trend violation and a new higher low, I will be looking to sell the rallies, given that the algorithms say that I can enter that trade. And a decent area for that to turn around is going to be right in this area. Now, of course, we had some wild news last week. Markets were pretty crazy, and so it's a little bit hard for us to determine what exactly is going to happen, but I think price could reverse back down anywhere from here to here, and when the algos say I can go short, I will, right? It could even go a little bit higher. We have some structure right there. This is actually pretty strong right there, so we could go ahead and throw a fib on there just to take a look at where some of the probability is for that reversal back down. We could have a 382, which indicates a strong trend downwards, or perhaps a 618, which is right here at the top of a fair amount of this structure. So I'd be looking to either of these spots, the midpoint in the range right here, which is essentially the 382, or the top, which is essentially the 618, and I'd look to sell those. And it might take a while to get there, or it might get there pretty quickly, and we're going to see how it happens once the market opens. All right, well, this was a pretty comprehensive video. Now I'm only doing about one of these a week now, as opposed to doing videos every day. So these will be a little bit longer, and it's going to give us some opportunities. Now in the comments section, please send me some requests if you want to see a given chart. You want to see a chart of gold, you want to see silver, whatever it is, and I could do a chart, do a little research, and we can take a look at what might happen this week coming up. Thanks for watching. AlgoFactory.tech. See you on the next one.